What if I told you that your biggest monthly expense could help you earn rewards, improve cash flow, and even buy you an extra month to pay? Sounds like a great deal, right? That's exactly why more people are paying their rent using credit cards. But there's a catch. Done correctly, it can be a useful financial tool. Done incorrectly, it can become one of the most expensive mistakes you make with your credit card. So, should you pay your rent with a credit card? Let's break it down. Normally, rent goes directly from your bank account to your landlord. When you use a credit card, a rent payment platform or your bank's rent payment service transfers the money to the landlord on your behalf. The landlord gets paid as usual. But instead of money leaving your bank account immediately, the amount gets added to your credit card bill. And that's where the first advantage comes in. Depending on your billing cycle, you could get anywhere between 45 to 60 days before you actually have to part with your money. In other words, you pay the rent today, but you settle the bill weeks later. So why do people do this? There are three main reasons. First, cash flow flexibility. Let's say your rent is due on the 1st, but your salary comes a few days later. Basically, it's not fixed. Now, using a credit card can bridge that gap without disrupting your finances. Second, rewards and cashback. Many people see rent as an opportunity to earn points on an expense they're already going to make. If you are paying 30 or 40,000 rupees every month, those points can add up over a year. Third is convenience. Once set up properly, rent payments can become automatic, reducing the chances of missing a due date. So far, it sounds like a win-win. But this is where the story changes. Paying rent with a credit card is rarely free. Most platforms charge a processing fee of around 1 to 3%. Let's do the math. If your monthly rent is 30,000 rupees and the platform fee is 2%, that's an extra 600 rupees every month. Once a year, that's 7,200 rupees. And that's before you even look at your credit card rewards. Now here's the problem. Many cards offer rewards worth less than the fee being charged. So if you are paying a 2% fee but earning rewards worth only 1%, you're losing money on every transaction. The points may feel good, but the math doesn't work. There's another issue many people don't consider. Credit utilization. This is the percentage of your credit limit you're using. Let's say your credit card limit is 1 lakh rupees and your rent is 40,000 rupees. Suddenly, 40% of your limit is being used before you've spent a single rupee on anything else. Higher utilization can sometimes put temporary pressure on your credit score. So even if you're paying on time, large rent payments can affect how lenders view your credit profile. But there's one mistake that's far worse than anything else. Not paying your credit card bill in full. This is where the entire strategy just falls apart. Because the moment you start carrying a balance, credit card interest kicks in. And that interest can range anywhere between 24 to 42% annually. At that point, any reward, cashback, or benefits you've earned become meaningless. The bank makes far more money from the interest than you make from the rewards. Now, what about paying rent through UPI on a credit card? Be careful here. Many people assume they can simply transfer money to their landlord using a credit card linked payment method. Depending on the bank and the transaction type, it may be treated differently from a standard purchase. In some cases, transactions can attract additional charges or be treated like cash withdrawals. That means extra fees, immediate interest, and fewer benefits. So always check how your bank treats rent-related transaction before using this route. Now, when does this strategy actually make sense? Well, paying rent with a credit card only works if three conditions are met. First, the rewards you earn are higher than the processing fee you're paying. Second, you pay the entire credit card bill on time every single month. And third, the rent payment doesn't push your credit utilization too high. If even one of these conditions isn't met, the benefits start disappearing very quickly. So, would you pay your rent with a credit card? Let us know in the comments.